Hey everyone, welcome to today's video. So in the last few days, NBFC stocks like IIFL, Bajaj Finance, Awas Finance, etc. has fallen down at a dramatic pace. And IIFL in particular has been implied with some regulations by the RBI. So in this video, we'll be talking about what were the actual reasons that has caused this dramatic crash all of a sudden in the NBFC space and what has actually happened with the IIFL Finance Limited. Is it going to go bankrupt or what has actually happened with its business? So let's get into it. So if we look at all these stocks, IIFL Finance has gone down by 30% in the last few days. Bajaj Finance is actually recovering but has fallen down by more than 5% in the last few days, and Awas Finance, the same story. But if we look at the NBFC space, what does NBFC actually mean? NBFC are the non-bank financial institutions. That means they are not having the license to do banking operations, but these businesses are into the financial services space. For example, if we look at the Wikipedia, what it talks about is that NBFC facilitate bank-related financial services such as investment, risk pooling, savings, and market broking, etc. So the stocks like IIFL, Bajaj Finance, Awas Finance are not directly a bank but are into bank-related financial services. But if we look at IIFL businesses in particular, we'll see that it is one of the India's leading integrated financial services group, and it has diversified into number of businesses, of which some of which are non-banking and housing finance, wealth and asset management, broking, financial production distribution, investment banking, etc., etc. But recently, RBI has implied some regulations on one of its businesses of IIFL, particularly the asset management business. Now, I found this article which talks about that the RBI has imposed a ban on IIFL's financial position, but that was related to its gold loan portfolio of the company. And the inspection has shown various kind of concerns, out of which main is the breaches in the loan to value ratio. Loan to value ratio is basically when you put something on a collateral to the bank for which you are getting a loan. There is some kind of breach in that. So let's say you have gold worth rupees 5 lakhs and you go to a bank and give that as a collateral and borrow money of around 4 lakhs on that gold. So if you are not able to pay that 4 lakh loan, bank has a right to sell that gold and recover that loan amount. So in this, RBI has found these kind of breaches, about which RBI has given few notices to the institution. Now, this was one of the main concern. Another concern that is talked about a lot is that the institution has done some kind of adulteration to the gold itself. So you can read about the whole story in the news channels and what has actually happened. But if you look at the total AUM business of IIFL in particular, we'll see this pie chart, and we'll get to know that the gold loans that the institution has provided accumulates to 32% of its whole asset under management business. And here we can find out the distribution of all the loans that this company has been providing to the people. Much of the loan is into the home loans, basically real estate, and gold loans is one part of that. And RBI has set regulations, imposed bans, or other kind of things specifically to the gold loans. But does that mean that the IIFL stock is going to go bankrupt, or these kind of RBI's regulations is going to hamper its business? Well, the answer is of course not. The RBI has imposed regulations only specific to the gold loans, but if we look at the whole business of IIFL, it is actually diversified in a lot of things. And this is just a one part of the IIFL Finance Limited. And in the short term, of course, these kind of news regulations are going to hamper the share price, but in the long term, it is going to adjust. Moreover, the share itself has absorbed the impact of these kind of news and the regulation that has been in the news lately. Also, if we look at some other NBFC stocks, which are like Bajaj Finance and Awas Finance. These are the stocks which have absorbed the collateral damage. There's nothing wrong with their businesses or actually into some kind of shady stuff like the IIFL. But these stocks have been into the news because nowadays what is happening after the Paytm share has broken in the last few days. Now there is a collateral damage to these kind of stocks because RBI is being active in this kind of NBFCs. Because if we see in the last few days, Paytm is the stock that has been the most impacted by these RBI regulations, and the sentiments are that RBI is going to audit all these kind of companies, because of which there is negative sentiments among the people and these companies. Now if you look at Paytm itself, the all-time high of Paytm was around 1800 to its lowest is around 300, and which is an 80% correction. Now, in the NBFC space itself, because RBI is taking so much active actions, there is negative sentiments. Because of this, these kind of stocks like Bajaj Finance and Awas Finance have this dramatic fall. Okay, so that's pretty much it about what is happening to the IIFL and the NBFC space. But one thing to take care is all these companies that I've talked to are fundamentally good, like Bajaj Finance and Awas Finance, and it is a good time to take position in these kind of stocks because these companies are trading at a bargain price. And coming to IIFL in particular, we can wait because the regulations and the bans imposed by the RBI are not yet clear. And apart from its gold business, specifically under the AUM business, otherwise the company is all looking good. And if all these regulations and the bans are clear about by the RBI, then it is a good stock to invest in. So yeah, that's pretty much about the IIFL and the NBFC space. That's it for today's video. See you in the next one.